Hello and welcome to Switzer Investing. I'm Peter Switzer. Thanks for joining us on this program tonight. I'm going to look at a number of stocks that a lot of people are interested in as a consequence of reporting season. We'll talk to Adam Dawes of Shaw and Partners first, and then we'll get Mike Gable to look at the charts that go with the stock. So we'll get the collective view of both Adam Dawes from a broker's point of view, and then we'll see what Mike Gable's charts say about these stocks. Adam, thanks for joining us.
Great to be here, Peter. Thanks so much.
Mate, just before we go on, I wrote a piece over the weekend about whether this rally can keep on rolling on. It's an interesting one, and I'm kind of thinking historically, people like you and I have known that you often see situations where you expect interest rate cuts in the US, and when they come, the market actually falls. So it's like buy the rumor, sell the fact. What's the likelihood of that, mate?
Well, you're actually right, Peter. And we've been doing a little bit of work on rising interest rates, and then the pause from the hold of the interest rate to then the first interest rate fall.
Yep.
And it's actually the market actually rallies from the pause. It doesn't actually rally from when the interest rates start to fall, because what happens is the rhetoric changes from everything's too tough and we've got to lower interest rates to are we going into a recession? And that rhetoric changes as soon as that first interest rate starts to fall. Everybody starts to think about that, well, this is not going to be as good as what it is. So there's a lot of work being done on that, on where we are now. Now, that's good for Australia. It's great for Australia because that pause is going to be a little bit longer than the rest of the world. Fingers crossed. That means that potentially we might see some further uplift in our market. But yes, you're absolutely right. It's buy on rumor, sell on fact. And that whole period which we're in at the moment looks to be ending very soon.
Yeah. And mate, I would also say that after you get past the US election and those first rate cuts have come through from the US, probably then will be a reevaluation, particularly if the conclusion is, no, it's not going to be a recession. It's going to be a soft landing. Then I think this rally can come again. But I'm glad you're kind of on the same page as me.
Oh, absolutely. I think the only thing that we'll be potentially looking for is some of those consumer finance stocks like Zip, that, as soon as interest rates start to fall, everybody's going to be looking for these kinds of stocks where they're going to put their money. We might see some pockets rallying on the back of falling interest rates.
Yeah, for sure. Let's go to the first stock I asked you to have a look at, and that's Fortescue. And I noticed, I think it was the week before last when BHP and Rio went for a nice rise. Fortescue went for a much bigger rise. And my anticipation is that 2025 will be better for commodity stocks or material stocks. Can you see FMG having a better 12 months than, say, BHP and Rio?
Yes and no. Fortescue, as we know, has got one customer and one product. So it is a little bit tougher where you've got BHP and Rio being a lot more diversified, and certainly BHP in that copper space and other areas where they can pull some more levers. I think Fortescue, you need to be careful. We know that there's an iron ore, not an iron ore glut, there's a steel glut, and China's exporting more steel than ever at the moment to around the world. But there's probably some inventory build up there that has to be sort of pushed through. The property market needs to get itself sorted in China. And then probably in 2025, Fortescue should look to start moving again. But we do know that the commodity stocks have reduced dividends, and we've just got to be a little bit careful in that iron ore space. We've got lots of other production coming on, Simandou in Africa. There's some other areas as well. So I think we just got to be a little bit careful with the iron ore story. It's a part of a cycle, and in that commodity cycle, we're at the bottom end of that cycle. So there has been talk of, sort of switching out of the banks into resources. Maybe it's the right time, but I think Fortescue is probably one of those ones that I'd be buying BHP and Rio before I buy Fortescue. Maybe some of your listeners wouldn't like that, but I think that's probably a better way to go.
Yeah, I think it's a safer way. And also, mate, I was interested that Mike Henry, the CEO of BHP, made the point that China's not the only big customer in town nowadays. India and Southeast Asia are becoming rivals to China, not bigger, but still certainly it's good to see that there is a diversification coming through with major customers.
Yeah, and it was great for BHP also in that they did an economic report which talked about growth in the global market. They still think the globe's going to grow around about 3%. So, albeit that's not huge, but that's still growth. And I think that's exactly what BHP, Rio, and Fortescue want.
Exactly. Let's go to the next one, Paladin, PDN.
Oh, it's a tough one, isn't it? If you're a uranium bull, then this is an amazing opportunity to get in at, Paladin at lower prices, than potentially what it's ever been in a long time. So yes, I think it does look interesting. Obviously, there's lots of other stuff that needs to go on with Paladin and the uranium sector overall, but we are quite bullish on the uranium sector. And so I think Paladin actually looks like there's a lot of value down here. It's probably the biggest and the baddest for the Australian market. But we saw I forget. Anyway, we saw some of the larger producers overseas having to downgrade their production because they couldn't keep up with that. That meant they had to go and buy it in the spot market, and all of that kind of stuff does bode well for the uranium sector.
Yeah, we'll work on that pronunciation by the time you provide an amazing comedy for the program, mate. I appreciate that. This is an easier one for you to pronounce. Qantas. What do you reckon's going on there?
Well, big sort of not upgrade, but the results came out. The stock didn't do too much, and then 2 days later, it shot up. There's been talk of that they've actually fixed a lot of internal issues in Qantas. I did hear the other day that they'd given all Qantas staff a $500 flight voucher for them to use. Right? Maybe that's a little bit of help there. Look, I took some profits in Qantas when it hit that sort of high there. I thought that sort of represented something quite well. One of the best run airlines in the world. I'm not a huge fan of airlines, big asset holders, as well as they're having to re-energize their air fleet, which is going to take time and a lot of capital. So yeah, look, it's an interesting one. I'd be selling on any further strength, and then looking to come back in at lower prices because we know these things hit air pockets and then and readjust.
Yeah, and also a nice play on words there, mate.
Thank you.
But also, sure, I think the Olympics was good for Qantas as it was for Woolworths. It helps improve their brand image, but I still think they have to spend a lot of money to really get their brand back to where it was, and that's might show up in the next bottom line in February. So, but I think you're right. If it dips, probably a buy, but if it goes much higher, I think I'll be thinking about selling as well. Let's go to Flight Centre. A number of its rivals have copped it lately, Corporate Travel and Webjet. What do you think of Flight Centre?
Well, Flight Centre's held up really well. Corporate Travel's been absolutely hurting me. I'm in at higher prices and long and wrong on this one for clients, but Flight Centre's actually held up really, really well. I think it's a mixture of two things. First of all, obviously, we know that the consumer is a little bit fragile, but we have started to see the older demographic favouring international travel over domestic travel, as well as then they're probably not as internet savvy. So they are going to a travel agent to book these flights for them. And that's exactly where we're seeing Flight Centre and those numbers starting to come through. I'm always a little bit cautious on Flight Centre around that $22, $21 level, which it is here at the moment. But there's a lot of groundswell or support for Flight Centre going forward. So I think that, that thematic of the older aged or the baby boomers, if you'd like to call them, they've got the cash, they're able to travel, but they do need someone to hold their hand. And I think that's certainly where Flight Centre sits. I'm not a huge fan of Flight Centre, but look, it's looking pretty good over $20. So I'd be holding it.
Yeah. I do remember when internet travel became very popular and some poor traveller was aiming to go to Birmingham, UK, and end up in Birmingham, USA. So I think there are a lot of older Australians not as confident with the internet who prefer to talk to someone who they can ring up and chew out if their room's not available when they end up in Paris.
Just like a full service stockbroker, might I add. But anyway, yes.
Oh, yes, those brilliant full service stockbrokers. Okay, let's go to look. CBA it's seen 140, hasn't it? And I thought 110, 115 was going to be the tops. what in the hell's going on? And do you, like me, expect eventually there will be a rotation out of one of the best banks in the world into other stocks that will benefit from lower interest rates?
Yes, is the answer. I mean, even Macquarie's looking really strong today as well. But
Mm.
look, if you look at the entire banking sector, it's more expensive than our ASX 200 market, right? So that says something to you that there is this two-speed. There's this issue where you've got this business, and Commonwealth Bank is obviously a fantastic bank, albeit some of Matt Common's comments to the Parliament the other day was a little bit off the hip and probably not so well scripted. But look, certainly I think overall, I think Commonwealth Bank is a powerhouse unto itself. We've seen a lot of passive buying, but yes, there's got to be somewhere around here, or even, at 140, 141 all-time high, there's got to be some kind of pullback in this thing. And I just don't know where that's coming from. And it can't be retail buying, keep bringing this up. It's got to be international buying, wanting to get access to the Asian banking sector. And I think that's where they're using Commonwealth Bank as a pseudo exposure. But most of the banking sector we know is now overpriced. It is flat earnings going forward for the next 2 to 3 years. And it won't take much for this thing to just tip over a little bit, and then the fire will start. So I'd just be cautious. We've been trimming some of the banks, trying to trim some of the banks for clients, putting that into some other things. But at the moment, Commonwealth Bank looking very strong, and you don't want to stand in the way of that steamroller at the moment.
No. Yeah, I'm sure you have the same problem as I have with my financial planning clients, trying to convince them just to
Yeah,
maybe sell 15%. So if the
yeah,
stock price falls 15%, we've banked the profit. But it's not easy to move someone who got in at maybe $50 or $40, but
yeah,
still, it's a big issue. And I think a lot of people might be a bit shocked when eventually fund managers do take, or foreigners take their profit and go
mhm,
somewhere else. Final
yeah.
one, ResMed. It really hasn't disappointed. We
Mhm.
liked it when it was pretty low in share price terms a year ago. It's
Yeah,
come good. It reported well. But what do you
yeah.
think?
Well, I remember a year ago us talking, and ResMed was $21, $23, and we're all scratching our heads going, we don't understand this, but it was the most beautiful, perfect timing to get into this stock at some really great prices, and I haven't sold a single thing. I still think this is going to continue to go higher. One of the things that I think that is spurring ResMed on is that the managing director came out the other day and said the GLP-1 drug is actually now a tailwind, not a headwind, a tailwind to
Yeah.
ResMed's overall business. So I think it's fantastic. I'm really comfortable with it, happy to be there. And every day it just, sort of ticks up really nicely. It's not a huge mover, but just sort of, that
Yeah.
incremental increases is exactly what you want in a stock. And look, this one, yeah, fantastic. Everybody should own some healthcare as well as ResMed in their portfolio.
Of course, that's not advice. It's great education, Adam, isn't it, really?
Absolutely. Please seek professional advice before you do anything.
Okay, now before we go, GLP, is it a diet drug you're saying?
Yeah. So yeah, the Ozempic.
Why is that a tailwind, did he say?
Well, yeah, they're basically calling out that obviously as you continue to lose weight, the face mask is still needed for sleep apnea, and
Right.
they are saying that more and more people are using the drug, but it is a tailwind. And we tried to do a little bit more work on it, but
Yeah.
it definitely helped the share price
Yeah.
continue to move
Yeah.
higher. So
Maybe when you get thinner, you snore louder. Who knows?
maybe.
Mm.
But remember the GLP-1 was just for diabetics. It
Okay.
wasn't for anything else. And so yeah, they're potentially saying it's a tail. Anyway.
Okay. We'll look into that, mate. But
Yeah.
thanks for the alert. Great. Thanks for joining us, and we'll see you in a couple of weeks' time.
It's great to be here. Thanks, Peter.
Adam Dawes of Shaw and Partners. Well, joining us now is Mike Gable of Fairmont Equities. Mike, thanks for joining us.
Thanks, Peter.
Okay, let's kick off with where we always do, the S&P 500, the US stock market. What are the charts telling you, Mike?
Yeah, so I mean, price action is obviously has been very interesting in the past month for the S&P 500. So the past month is where we had the market make a new high. Obviously, it fell at the end of July, and you'll recall at the start of August we had those very two horrible down days. So
Yeah.
a bit of a pullback there in the S&P 500 from above 5,600 to close to 5,100, and then it's rebounded straight away. So I guess quite unusual in that it's just gone all the way back to the old high without really taking a pause. But what's interesting is that in the last several days it has managed to sort of hold in there near the old high. So given that it came up to the old high, you'd expect a bit of selling to occur and possibly pushing the S&P 500 down again. But as I said, in the last several days, it's really only moved sideways, which is actually a positive. It looks like it is churning through any possible selling here, and that is being met with buying. So at the moment, it looks like the probabilities are the next move would be for the S&P 500 to head higher, not lower. So
Yeah.
quite interesting.
Yeah. I was talking to Adam Dawes earlier about the old history of, buy the rumour, sell the fact. So I guess we won't see a rate cut in the US until the middle of September. So, your view on a rising market until then could actually prove to be right.
So far that's the way it seems to be playing out.
Okay, right. Let's go to our next stock, well, the stock I asked you to have a look at, namely Fortescue. And I know over the years you've been a fan of Fortescue, often at the right time, never at the wrong time. And we did see it actually go for a bit of a run last a couple of weeks ago, much more than BHP and Rio when the miners were rising. What's the charts telling you about Fortescue at this point in time?
So with these commodity stocks, as we know they're cyclical. They have their big ups and downs, and generally you look to buy them on that down period when everyone is bearish on those stocks. Sometimes we get it right, sometimes we get it wrong. I thought we're getting that bottoming phase several weeks ago, a few months ago. But it has gone a bit lower. But I think what's interesting, if you were to have a look at if you have a look at the Fortescue chart going back at least a few years, so let's say a 5-year chart, you'll notice that the recent decline looks very similar to that decline towards the end of 2021. So this was a situation where you had Fortescue trading sort of in the mid to high 20s, only for it to fall back down to about $14. And then everyone was negative iron ore and et cetera. It did need a few weeks or so to settle down, and then it rallied about 50% in the space of several weeks. So I'm seeing a similar sort of washout now with Fortescue. Looks like it's forming a low. It might need a few more weeks or so, similar to what we saw at the end of 2021. But I'd expect some sort of rebound, whether we're looking at a similar 50% bounce, that would be nice. But again, these stocks are cyclical. You tend to, you've got to look for when they pull back, and no one likes them, and clearly no one likes them at the moment. So charting wise, it's holding in there similarities to 2021, so one to keep an eye on.
Yeah, so thumbs up for Fortescue for those who want a bit of speculation.
Look, I don't think it's got much downside from here. The way it's holding in. So, look, if you like to be a bit of a contrarian, then Fortescue here is potentially a buy.
Okay. Now, one of your favourites for last year was Paladin. You recommended it 10, went to about 17. It's back around near 10 again, isn't it? So what's your current view on Paladin?
It looks really interesting. So, as you say, that $10 level was a major level for a very long period of time. It managed to break that earlier in the year and ran towards sort of $17, $18. But it has come back to that $10 zone. It's a bit under that at the moment. So this, I think, is the second bite for those who missed out on that first run. And the reason why I think it looks really interesting here, not because it's a very good level of support for the stock, but I've been keeping an eye on uranium prices. So, the uranium prices that you read about all have to do with the spot price, which is it's very illiquid. It's not a true representation of what uranium is being bought and sold at. So, spot prices spiked earlier this year, only to come down, and the share prices came down. But what I've been tracking is the long-term contract prices, and they've been trending higher for a number of years now, including all through this year, getting higher every month. So there is a bit of a disconnect at the moment between longer-term uranium prices that the utilities are signing up for and the share prices. So I think down here is the zone where it could get very interesting in the next few weeks or so with these uranium stocks. I'd expect them to bounce from here and recover pretty well.
Okay. Once again, a speculative stock. It's not what you might call a core holding, but as you pointed out last year, it was a good buying around 10. It did go to 17. And I guess if the world becomes a little bit more supportive of uranium as an alternative for the sake of the climate, eventually the share price should reflect that. So it's going to be interesting to see how it plays out. Let's go to Qantas now. I thought Qantas would fall more than it has. Had a reasonable report, and they bought it after the report. But what are you seeing in the chart?
So it's had a pretty good run throughout the year, and that report from last week seen the share price jump up from sort of around $6.40 to around $6.80. So a pretty decent jump in a couple of days. So short term, the momentum looks like maybe it can go a bit higher, but when I zoom out and have a look at a longer term chart, I could see that earlier on in 2023, this area in the high sixes has proven to be quite problematic for Qantas. So this is where the selling tends to step in. So I wouldn't be surprised if it does slow down here. Maybe it can go higher for another couple of days, but I'd expect some selling to kick in, and it might just struggle for a period of time up at these levels.
Yeah, so I guess what you're saying is you wouldn't be recommending your parents go very long Qantas at this point in time.
I wouldn't be recommending anyone buy at these levels. You need to, again, give it time, let the sellers step in and just see where it ends up before it's ready for the next phase to move higher.
Okay. Now, a company that's quite surprised me is Flight Centre. A lot of its rivals have copped it. What's the chart saying about Flight Centre?
A very, very volatile chart. So this one would be quite a difficult one to trade, let alone hold on to and not be worried, because over the past sort of year and a half, we've seen it swing between about $18 and $23. Even in the past few months, it's been up and down quite a lot. So you're not getting a nice steady uptrend in this stock. So at the moment, it's trading just above $21. I could see that over the past couple of years, selling has kicked in around that $23.50 mark. And recently the buyers have stepped in at around $18, $19. So at the moment, it's pretty much between those two levels. So it's not the greatest place to be buying it. I think it really needs to clear all those sellers around $23.50, and then you can be confident it can sustainably trend, if it can do that. Whereas in the meantime, it's just chopping around. I think it's a bit risky at this point if you're stepping in.
Okay. Let's go to CBA now. And I don't think even your great charts, Mike, told us it was going to go as high as it has. But maybe I'm wrong. Maybe, I don't think you and I have actually discussed CBA in recent times. I thought 110, 115 might have been the tops, but it's just kept going up and up and up. Do you think that it's going to keep going up and up and up?
Yeah, look, I mean, we did look at it earlier in the year, and CBA had a very had a major resistance level around $110. It broke through that. So, the view was it should head higher from here. But yeah, of course, I couldn't have, picked $140 if I did have to take a guess. But here we are. It's still trending higher. I think the only thing going against it is it doesn't seem to make sense. But yeah, maybe that's the positive. I think, market stocks usually top out on euphoria. But at the moment, not everyone's euphoric about the banks. They've still got their bashes. So yeah, maybe it can make $150. All I could say is, yeah, it's got strong upwards momentum still. At the moment, it looks like the sort of chart that you buy on a dip. You don't chase it after it's been up several days in a row, but you get a bit of a dip, and it looks like there's buyers every time they dip. So that's the state of play at the moment. Yeah, no warning signs except for the fact that it just doesn't seem to make sense for some people, but sometimes they're the best stocks.
Sure. So it's not screaming sell, sell, sell.
No, not at the moment.
Okay.
I think history's shown if you sell something because of a valuation number, yeah, often that's a bit of a mistake, and that's what people who short the banks do. They look at a valuation and they think it doesn't make sense, but 12 months later you look back and realize, okay, well that kind of did make sense, and it was silly shorting it.
Okay, one we've liked on the way up, ResMed. Is there any reason why we should get out now?
Yeah, it is hitting a pretty major level here. So it's had a good couple of weeks, but up at $36 when I look back at some of the turning points in the past few years. Yeah, this has been a problematic area. So around mid-2021, it did rally as high as about $40 before dropping. But then from around about September, October 2021 onwards, every time it came close to $36, that's when all the selling kicked in. So again, you wouldn't be rushing out to buy it given it's so close to that sell zone. Maybe not enough that you'd be joining the sellers just yet because it still has a bit of upwards momentum. But I think if you're looking to buy it, you need to buy it on a dip. ResMed is again one of those stocks that tends to be with buying on a dip. Usually there might be a quarterly result that the market doesn't like for a day or two, and it takes a bit of a dive, and or there's some news about Ozempic again, and you get a buying opportunity. But with the run that it's had in the short term, up at 36, don't chase it. Just keep an eye on it.
Yeah. Okay. Now your pick. Tell us about your pick.
Yeah. So I still quite like the gold sector, and there's a stock that that I think's been trading very well that investors can look at. It's called Resolute Mining. It has the code RSG. So this is a stock that since around February this year has been trending quite nicely, a very sustainable uptrend. It tends to bounce off the 50-day moving average, so you could use that as your trailing stop. In other words, if it falls under that moving average, time to sell, but as long as it bounces on top of it and continues trending, you just stay in the trade. We're looking at the way it's formed over 3 months, 6 months, and 12 months compared to the top 500 stocks in the market, and it tends to outperform about 90-something% of them over those time frames. So yeah, just a great trending stock, great trading stock, and I'm still bullish on the gold sector. I think globally it doesn't look like we're getting a lot of flows into global gold ETFs yet. So the price has gone higher, but I think the movement into the stocks hasn't caught up yet. And yeah, if we get further catch up in terms of money flow into stocks, then these things can go quite a bit higher from here.
Yeah. One thing we should say is that when interest rates in the US fall, it tends to be good for gold. And I guess we can't see the hot spots and the geopolitical problems around the world going away anytime soon. That's also good for gold as well. So I can understand it. I personally don't want to buy gold at these levels because they are really high levels. But from your point of view, resolution can go higher. And I guess it's just going to be a time when you want to get out. But it's been a good call from you in the past. So keep our fingers crossed on that one, mate. Thanks for joining us.
Thank you.
That's Mike Gable of Fairmont Equities. Before we go, I'd have to make the point, unfortunately, on various social media platforms, there have been advertisements about me offering stock tips and inviting you to join WhatsApp groups and whatever. I never do this. I never will do this. I'll never sell stock tips online. If you want to get what I do, you have to become a subscriber to the Switzer Report, and then you'll get education about stocks and what other people like Mike Gable and Adam Dawes are thinking about stocks. But we don't tip. And that's the part I really want to emphasize. If you see anything out there from those low-life scumbags who use the internet to try and scam people, do not think for one moment there's any association with me. That's the show for this week. Thanks for joining us. I'll see you next week.